Hello everyone. So today I will be finishing off tomorrow's mentorship because I won't be there for session since I will get my vaccination and I don't know how long that will take. Yeah, so in this video I'll be going through body closure, confirmation, and why we should wait till the news event is over, how we can trade that pull back inside of the liquidity cycle. Okay, so you all know that the liquidity cycle that we are going to be focusing on is this one to this one, this one to this one, and the one that's upcoming in another half an hour, yeah, which is 11:30 a.m. EST to 1 p.m. EST, right? I don't know if you guys have done your studies or not, but you guys should know by now that each liquidity cycle has a rate on liquidity, which will give you a pullback into PD array, or it will take you away and change the current trend, like this one over here, the buys that we took over here to go up, it changed everything, right? So something like that. So yes, now when we look at the closure of the candle, right, we are always when we backtest, we are always looking at closed bodies, looking at closed bodies like this, closed bodies like this, closed bodies like this. Now what's the point of looking at the closed bodies? What's the storyline that it gives? So if you look at this, for instance here, the moment you see that the body closes below the low or closes below the body here, you know that the sentiment, at least for this liquidity cycle, is what? Bearish, right? That's why we wait. We know that if we get the closure, we know that at one point it's going to come back somewhere here and sell off like what it did, right? And then on the lower time frame, you can enter it somewhere here as well. So the entire point of a body closure is this. This is the news candle for today. I did not wait for the body closure, therefore I closed my trade. It closed bearish, right? It closed bearish, closing below this candle, effectively making this a valid bearish order block, at least for this period of time, right? So closing like this gives us a storyline that, okay, if we close below this, we are bearish. If we close above this, we are bearish. We are bullish. If we wick and we don't close, then what? We need to wait. For instance, here. Right here. See, we wicked and we never closed below this, right? So what happened? It faked you out and then only came back down. So after faking you out and after it faked you out and came back down, you can see that now it finally closed, giving you what? Bearishness. And how could you have gotten out that sell here? Keep your sell limit here as it closed below, and here you go. Here's your entry, and you can enjoy the move up until here, take partials and let the rest run. Okay, so that's the move I wanted. I did take it after I closed the buy over here and the other sales. I did take this. I did tell you guys, I did take this, and I did take this. Took this buy, took this sell, took this buy, took this sell, took this buy. Now currently in a sell over here. Okay, so essentially all the swings traded, but there have been about three failed trades. Three failed trades in the sense that was a failed trade over over here trying to get this sell. I don't know, something happened. I think there was extra move up here, so that was a failed trade over there, and there was another failed trade somewhere here trying to get into this because I remember I didn't wait for the closure, right? So that was a problem there. So I think I tried two entries over there and I lost two times there. I lost one time here, and I won once here, and then I won once here. I had three positions in this up move here, so I won thrice here, and I had one position up here. So I had 3 L's minus 3R and 1, 4, 5, 6. 6 wins equals to each win constitutes 2R, so 12R. 9. Okay, that's my total for the day. Anyways, body closure. Look at this. Now I'll go through today's price action only because I want to keep this short. The rest you guys do it based, you do it on your own for homework. Okay. Look at the 15-minute chart. So when we trade intraday, we are interested in the 15-minute chart and the 1-hour chart. Okay, that's because they give us the info. We know that okay, inside of this particular portion of time, that price was bearish. Inside this particular portion of time, price was bullish, right? So look at the 15-minute chart. As we approached higher, and now I'm combining this with the liquidity cycle as well. As we came into this liquidity cycle, you can see price jabs up here, taking our buy side liquidity. And you see, does it close? Yeah, it does close. Closing above, meaning that external range liquidity has been taken. So now what do you need? You need a confirmation. Now how do you get that confirmation? You get that confirmation via price showing you that there's bearish sentiment or there's bearish order flow. So how will you know if there's bearish order flow? By candle like this. If you're looking at the 15-minute chart, you're going to see a candle like that. And then what becomes your point of the point in which you sell? This breaker here. Here, you sell it off. Right? So that's that. So that when you want to see the change in order flow, this is what you want to see. Okay, this is exactly what you want to see. And give me a second, there's a lot of messages coming. There. Wait, what? Talk a little bit about velocity trades. Right. Right. So for instance, if you look at the body closure here, it closed, came here. Now see, we closed below the bodies and then we took Sursa liquidity, meaning what we are bearish, right? So we are bearish here. Well, why here? Because see, this is the largest body candle that could have been used inside of this portion of price action, because we know that after price takes external range liquidity, it should run for what? Internal range. So at least over here, somewhere here. Maybe this one, but it reacted over here, right? So it came all the way down there, so the take profit hit. And then over here, when we are outside of this cycle, there's another trade here. Now, this is something that's personal to me, which you will know further down the line. So forget about that. So then looking at this here on the 5-minute chart. Okay, on 5-minute chart. Sorry, the 1-hour chart. On the 1-hour chart, you can see that. Now see, this is fractal, right? So we saw the break above, meaning what? Meaning that when we see a change in delivery, meaning, so for instance, from somewhere here, we know that external range liquidity has been grabbed, which is denoted by the closure above, right? External range liquidity has been grabbed, which is denoted by the closure above, meaning that the chances of internal range liquidity being reacted from is high. So where's the bullish order block? Now, what's the bullish order block? Bullish order block is the lowest down close candle inside of a range. What's the range we are working with? This low, at least for this part, this low, this high. So between this low and this high, what's the lowest down close candle? This one. Remember the buy I took over here, it was based on this. Okay, so this is your consolidation, your expansion closing above. Price comes back down into it. That was the buy. So looking at the 5-minute chart, you can't see anything, right? Then looking at the 1-minute chart, you can see that I bought this based on this. But if you were waiting for confirmation for the change in the state of delivery, you would have had to wait until the news. So price going and closing above all of these highs, right, means that it should at one point come and take an order block from here and go back up, right? So where is the order block over here? Inside this consolidation, that goes higher. Where is the lowest down close candle? This one, right? So this is your lowest down close candle from here. So that's your class OB. Okay. The closure of price from all of these points over here indicates that price is bullish. Okay, the closure of all of this indicates that price is bullish. Now, I think I might have said that, okay, you want to see price closing bullish inside of bearish PD areas, and you want to see price closing bearish inside of bullish PD areas. Why is that? Because now if you look at this portion and this portion, they are both bullish and they close inside of the PD areas, right? Why is that? Because smart money, what they do is they accumulate their shorts in up moves, right? So they're going to accumulate short until they meet counterpart, in which they can offset their longs and get more shorts in. So in order for that to happen, this needs to close what? Bullish. That means that short positions are being built up in the form of what? Sell side liquidity. Okay, the short positions are being prepared, or they are being built up in the form of sell side liquidity. So that is why you want to see the candle closing bullish inside of bearish PD areas. Immediately after that, you want to see the what? Displacement. Okay, and now after you get the displacement only, you will be taking part in the last point of order flow, which is the sell from the bearish order block. Price goes low, right? So all of these need to happen near key levels, right? All of these need to happen near key levels. All right. So then, moving on. A second. Moving on. What's the next thing? So I hope you understand that about the closure of the bodies, how important it is, right? You want to see it close, because if it closes above a range, bullish like this, what's the next thing? It means that external range has been grabbed, so we are going to see internal range. But if it wicks, right? If it wicks, like this is considered a wick, right? On the high time frame, this is considered a wick. So a wick over here to go up, what is that? There's no real closure over here, right? In the time frame that matter, there's no real closure. So now we have bullish sentiment or bullish order flow in play, meaning that if price comes down, we want to see it react from this bullish order block here or the break over here and go higher. Okay, so that's that. There's a lot of messages here I'm losing. Right. Confirmation. We look at confirmation. Number one, we want to see the body closure, right? We want to see the body closure, because if it is a wick, we want to take part in that long or short, but we're going to hold it for a longer period of time because it's going to be a complete reversal. But if it's a closure and after closing it makes a reversal, it's just the what? Pullback. The pullback for rebalancing purposes. So pullbacks for rebalancing purposes can be traded, right? For instance, here, Asian range, what happened? Asian range, it showed a change in state of delivery from where? From this order block here. Okay. Now, if you go to the 1 minute chart, here. Price took a low, price closed below the low, and now price is slowly going higher. Now, this is your real displacement, right? This is your real displacement. Now, where is your lowest down close candle? The lowest down close candle is this one. Why? Consecutive candles make one bullish order block. Therefore, this is the entry. Now, for confirmation, this is what you want to see. You want to see displacement away from external range or internal range. It depends on how you look at it. Internal, external range, and you want to see price coming back into the bullish order block. Okay, you want to see price coming back into the bullish order block. And then if you look at the 5 minute chart for this over here now, okay, over here, we finally got the closure on the 1 hour chart above the low resistance liquidity here. Did we? We didn't. We did not. We got the closure right. The closure right over here. we've got a slight closure over there, meaning what? This we are bullish. They are bullish. So we can see, or I can expect that pull back into this portion here and then go higher. So that's what's going to happen. If we get that closure like that, we will see the pullback and then we could see potential moves higher. But I'm not calling the market right now because it's going to be the weekend soon. But that's the idea behind it. Okay, that's the idea behind it. So we got the closure, bullish closure, meaning that okay, we can trade the pullback and then we can trade the internal range using the same concept of confirmation. Now, what is the concept of confirmation? The concept of confirmation is the bullish and bearish algorithmic model. I'm not going to go through that here. It's all in the Telegram group, so that's up to you to study. Okay. Now, looking at my cell over here, right? Looking at my cell over here, we got a closure above and we got a buy side liquidity graph. We got a closure below the bodies. We got a sell side liquidity graph. Okay, we got a sell side liquidity graph, and we are still yet to get a sell side liquidity graph over here. Okay, but it doesn't matter because if you get from a point of interest, if you do get a shift in market structure like this, it's considered a shift in order flow. Okay, it's considered a shift in order flow. So I wouldn't be surprised if price comes and trades down below here, or maybe over here as well. Okay, so you have this buy side graph, you have the body closure, you have the body closure, you have the sell side graph, right? Then what? You have to apply premium discount. Then premium. Inside premium, what do we have? Bearish order block. Where is the bearish order block? Here. It's up close candle here. Bearish order block. So price should then trade through this and go lower. Right? Price should trade through and go lower here. So these are the setups you want to see. These are the high probability setups that you can get every other 90 minutes. London, you got the sell over here. You traded the breaker, got the sell. This one I traded all this, so that's something for you guys to learn later. I got the sell over here, I got the buy over here using the same concept. Using the same concept, right? Now you can make your own adjustments and whatnot for your own entries, but this is the highest probable way in which you are going to be doing it. Okay, so I know that I'm not being very coherent right now because no one's here with me in terms of an entire meeting. So that's why I'm not going to into great detail. So this is a video, you guys can watch it and you guys can get something out of it because this is off record stuff anyway. So I'm going to be I'm going to touch on the subject as lightly as possible. Okay, I won't give you too much. At the same time, I won't give you too little. Okay, so that's regarding the body closure and the confirmation. So confirmation, we want to see the same thing. If the body closure to the upside on a high time frame, it indicates a confirmation of order flow. For instance, closing above a high, confirmation of bullish order flow. So what's going to happen? We are going to trade the pullback down using lower time frame confirmations in terms of breaking market structure, closure below, return to the bearish order block, and then price goes down low. Or price is displaces by a lot, showing that there's no chance for it to go back to the order blocks. And then what does that mean? That means it's going to react from a breaker. Okay, so that's that. Right, next up, the news event. Why should we wait until the news event is over? You can see that a lot of people have built up sentiment prior to the news event, right? Built up sentiment prior to the news event, meaning that smart money not on a central bank level, but from a commercial bank level, right? They can see that many people place their stops in the same particular region. What does that mean? It means there's more counterparty for order pairing, right? So if there's a lot of counterparty for order pairing just before news, it becomes right to take out. So yes, it can go and hit your take profit, then good. That's because you are taking small pieces of the daily range. But if you want to hold for massive moves, and it doesn't go in your way because of the concentration of stops, then too bad. You either lose or you get hit at break even. Okay, you get hit at break even. So that's why when you have a news event, for instance, at 8:30 here, news. Wait for the news. Okay, it closed. It closed bullish, but did it close above the highs? No, it closed below, and it closed inside of a bearish order block. Then the next one, what happened? It wicked. Did it close above? No, closed down. Nothing, nothing, nothing. Now this here closed below. The moment we close below over here, we also understand that, right? We also understand that here, from here down, we close below, right? So what's this? This is a interbank dealing wedge. The high, the low. So this is what a bearish interbank dealing wedge. It's a bearish interbank dealing wedge, and as a result, price is predisposed to go here, come here. Price is predisposed to come here. Why? Because liquidity. Okay, predisposed to come there because liquidity. So that is the reasoning that you would have in order to take this short. The short now how? Price breaks, 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 breaks. Now what's the pivot that should be broken? Either this one or this one. But if you just take a look at it from this point here, price breaks and closes below taking sell side liquidity, goes up into what? Bearish order block. Sells off. It's a trade I took. Then it comes to a bullish order block, and now this bullish order block here is framed on the 1 hour chart. Okay, it's framed on the 1 hour chart. Now, if you frame it on the 1 hour chart, then you can just take the trade as it is. Okay, because chances are you are not going to get that particular entry combination, or you're not going to get the particular lower time frame confirmation from price, because on a higher time frame the confirmation is already there, which is the order block, meaning it already went up, it did its thing, and then it came back down. So the confirmation is there, so price is just coming to complete it to give you the buy, and price goes higher. Okay, now yes, this works, but see over here, the news event went up, closed above this high, the London high, closed above the week's, I think it's the week, yeah, closed above the week's high, and after closing above the week's high, just slow into what? 1.1800 institutional figure, right? So institutional swing point or institutional level of 1.1800, which should be sensitive. So based on the sensitivity itself, I would like to see that sell off down here, breaker from here to here to here. So breaker, order block. This order block comes into the down close over here, so making this a propulsion block. So we should be able to see price coming down here. All right, so that's that about the news event. Always wait for the news event to finish, because here, news event finish, you can take part. Here, news event finish. Now see, you still can take part, because chances are it's going to give back all the gains in order to shake out the weak hands in the market. In order to shake out the weak hands in the market, it's going to do something over here. Okay, so that's pretty much it about the news events. So again, wait for the news events. And guys, if there's a news event and if it doesn't go your way, just don't talk about it, or it's going to confuse a lot of people about their own bias, right? Because some of them might have the correct bias, some of them might not. So let's not confuse anyone. Let's not make anyone anxious about their positions. Okay. So when you have news events on the way, just let it be and wait until the news is released and then go about completing. Okay. Right. So many messages here. And, how we can trade the pullback inside the liquidity cycle? I just said it. It's based on what I told you guys the other day to study. Every liquidity cycle will have a run on liquidity. So liquidity cycle here, get the 15-minute chart. Liquidity cycle here, there's a run on liquidity here. Meaning what? We can expect a reversal, reversed. Liquidity cycle here, run on liquidity here, up we go. New liquidity cycle has begun. What's price going to do? Now, we can say that the previous cycle took out liquidity. Therefore, we are going to be seeking internal range liquidity. Or you can say that what price is going to do is it's going to go run up one last time and then drop. Okay, because why? Every liquidity cycle tends to have one absorption of liquidity or one rate on liquidity. Okay, so that is pretty much it. If you have any questions, just send a message to me personally. If you don't understand anything, just send a message to me personally. Yes, I did not go deep into it because it's supposed to be off record, right? It's supposed to be off record. And the fact that I won't be able to make it tomorrow is why I'm making it recorded. Yeah, so take notes, do your own studies, and see what you can do with this knowledge, because all of this what I'm asking you to do, especially the rate or liquidity in each cycle, is going to be very important for the final delivery of the algorithm. Okay, the final delivery of the algorithm will heavily be reliant on this idea on the liquidity cycle reading one or two liquidity pools inside of a 90-minute cycle. Okay, so that's all. Now, before I move on, let's see what if anyone wants me to say anything. We'll talk a little bit about velocity trades. No, velocity trades is not what you think it is. But when I say velocity trades, I mean over a span of a couple of days. Velocity trades within a day is not velocity trade. Something else. Okay. Okay. So what I'm teaching is velocity in the sense of compounding over a period of days, not within a single day. Okay. For example, what to really understand price action, we have to stack so many entries. Definitely. If you don't know what you're doing, finished. And don't rush into it. But there's so many moving parts, right? There's so many moving parts because I think you'll have to watch this video about 3 or 4 times just to understand what I'm really saying. Okay, because this stuff, it comes with me losing a lot of money and gaining pattern recognition and all of that understanding through that, right? Through trial and error. So if I had to go through that, then if you don't do it without understanding, then you have to go through the same thing. Right? So don't be greedy for knowledge, just make do with what you have for now. And I will deliver this over time, because remember I said this is not something that anyone is paying for. This is not something that anyone is paying for. So I will take my time in its delivery. No matter what anyone says on private message, public message, the delivery won't be any faster. I will do it by my own time. Yeah. This is for everyone. We just treat the 1 minute chart as a 1 hour chart. Correct. Have as much faster. Correct. Small kids spitting facts, eh? Yeah, and don't see, right? See, high yard trades is unrealistic within a day. You will either make it or you'll break it. You'll be expecting a lot of things too much, right? And you're gonna burn your account. If it hasn't happened to you right now, then good, congratulations. But my battery went down. Damn. But it will happen, right? And trust me, it will happen. Right now, you are in the honeymoon phase of high IRR trading, right? Once it gets into your head, once winning a few times gets into your head, then that's when true destruction occurs. All right. So take it easy, take your own time. Take your time. Study everything. There are a lot of notes. on the a lot of notes that you can take in the commentary videos, in the boot camp videos, and all. Right. So the boot camp is essentially a guide in which you can think like how I think, and the commentaries are the weekend sessions. Uh, Essentially me telling you how I think and how you can replicate the same thing. Okay, in your own way, replicate the same thing in your own way, in ways in which you are comfortable with. Okay, so don't try to do too many things at once. Okay, so first have your trading plan ready. You know who you are. Have your trading plan ready, right? Don't do too many things at once, because it it's gonna get bad. Trust me, it's gonna get bad, right? So yes, stick to the liquidity cycles only. 234, 234, 830 to 10, and 1130 to 1, which is the one that's happening right now. Okay, so yeah, with that, I am done. I'm done. If you guys have any questions, send me a message. And again, I kept this as short and sweet as possible. If you don't get it, it's because I can't really get into detail with these stuff on record, right? I have to do it. I have to do it in front of an audience off record, if you get what I mean, right? So that's all. I'll see you guys on Sunday, because tomorrow I'll probably be too sick to even talk to you guys. Okay, bye bye.